China has enough houses to shelter 3 billion people. That is more than a third of the world's population. Tens of millions of properties have been built, millions have been bought, but nobody is moving into them. It all has to do with the Chinese investment patterns and the government's desire to show economic growth. But there's more to it than that, so stay till the end to find out the entire story. Too many houses, not enough residents. A very extreme estimation shows that China's empty houses can shelter a staggering 3 billion people. Let's put that into perspective. That's nearly 10 times the US population, or 15 times Western Europe's, and a whopping 140 times more than Beijing's. Keep in mind that China itself has 1.4 billion residents. China has more houses than they know what to do with. It might sound like an overestimation, but they know for sure that 1.4 billion people are not enough to fill out all these homes. This number has been doing the rounds in China for a while, based on official data that an average urban home is about 420 square feet. They also factor in the average number of people in a Chinese household, which is about 2.62 based on a 2021 census. This figure is based on experts' highest guesses about empty homes in the nation. But China has yet to tell us the exact space of these empty homes. They've mentioned there are around 7 billion square feet of unsold homes. But when you crunch the numbers, that's roughly 7.2 million homes if you assume they're about 968 square feet. That said, it doesn't count homes that are sold but not yet finished, or places bought as investments. This whole situation is a far cry from the government stance. They've been saying the real estate market's rebounding and getting stronger. But that's clearly not the case here. The ghost cities of China. A situation like this is odd to see when you compare it to the US, because China's housing situation is the opposite of America's. The US faces a housing shortage, thus making the American dream of owning a home seem out of reach for many. Millennials and Gen Z are especially worried about this. But in China, there's a different kind of crisis. Years of debt-driven construction have left a surplus of empty houses. They've overbuilt and overconstructed. You'll find rows and rows of empty houses in China. There are even entire cities of homes with no people in them. They call these ghost cities, but the name is a misnomer. It's not that people used to live there and then they were abandoned. These cities are entirely brand new, yet only construction workers have ever set foot in them. China's real estate sector was the star child of its rapid economic growth, but now it's spun into a building frenzy. The result? Lots of high-rise apartment complexes are completely empty. Some are incomplete due to construction firms running out of money. China has many cities full of empty high-rise apartment complexes. They are strange and almost post-apocalyptic. It's hard to say how many ghost cities there are in China. Some studies say that there are about 50 places. They're in many shapes and sizes. They're near smaller Chinese cities. Some are fully built, but some were stopped mid-construction. One is Ordos in Kangbashi. It was part of a plan to make 400 new cities in 20 years. It has schools, police stations, and more, but they're all empty. This is a result of real estate firms going bankrupt and pulling out of these projects. Visitors feel like they're in a ghost town. Even in Chernobyl, there are more people around, but Kangbashi feels different. There are a few people in some of these places, but many parts are empty. Some cities are miniature replicas of European villages. The emptiness of these cities is eerie. They tell a story of China's fast economic growth, but now the economy is struggling, so these cities remain almost untouched and very quiet. There are a few residents here and there, but some parts of the city are completely abandoned. China's empty cities are a strange sight. There may be a few people in the city center, but beyond that, you'll find huge areas filled with empty buildings and offices. For Chinese residents, real estate is a safe investment. It helps them get around government investment rules. People see these flats as a retirement investment. They trust that the value of their property will slowly rise and not crash. Even in so-called ghost cities, people don't regret buying homes. They believe that these cities will fill up over time and their home values will keep going up. Data on these cities is hard to find, but we know people buy apartments there and prices keep going up. This creates a big property bubble. China is always building new cities, but why are so many still empty? Can China's new plans for recovery and sustainability help these cities? What's the future of urban planning in China? To understand ghost cities, we need to know why they were built and why people buy property there. Local governments often start these projects. Officials want to show economic growth during their time in office. That's why they build so many homes. Building new towns is an easy way for officials to show they're doing a good job. It's a clear way to prove economic progress. In the late 1900s, local governments had lots of land to lease to developers. This started the trend of building cities. Private developers like the idea too because people always wanted new homes. Most buyers in these ghost cities are middle and upper class citizens looking for extra properties to invest in. Chinese people save more money compared to their American counterparts, but they suffer from strict investment regulations. So they buy real estate. They often buy homes for future generations. In China, you don't have to pay taxes on most properties, so many owners don't rent them out. They remain empty, partially because they don't want to risk taking in bad tenants. A lot of these places don't even have furniture, and many remain that way for their entire lifetime. Officials didn't really care about filling these cities. They didn't make rules to control who could buy properties or encourage people to move in. That's why these cities have few permanent residents. They mainly have government officials and the elderly. So now you have more houses and you have people to fill them. But there's more to this story, and it has to do with China's top real estate developers. How did it get like this? The real estate market was doing amazing for China's economy. The golden years lasted for decades. Mortgages accounted for 31% of China's GDP. 59% of the country's household assets were all real estate. But post-pandemic China faced deflation, rising youth unemployment, and weak demand. China's once amazing real estate market is now in shambles, with the pieces being desperately patched together by the government. So, what led to this crisis in China's colossal housing industry? Back in 2021, China Evergrande Group, a big developer, went bankrupt. This set off a chain of business losses, bursting China's real estate bubble. Now, Country Garden, China's biggest private property developer, is struggling to stay afloat. Unlike Evergrande, which went under because of its extravagant spending, Country Garden's problems come from investors and homebuyers leaving the market. Country Garden was started in the 1990s by Young Kwok Kyung. In the mid-2000s, the company began building homes across the country, from townhouses to apartments and even hotels. They focused on smaller cities. China has over 600 cities, divided into tiers based on various factors. The richest cities are in the first tier, and the poorest are in the fifth. Starting in 2016, China launched a program to redevelop lower-tier cities, giving residents new houses or cash to buy them. Country Garden also sold apartments in rural areas to people from more expensive cities. In 2016, their sales doubled, reaching over $69 billion a year for 5 years. Over the last decade, they bought more than 3,000 plots of land to build homes. But Evergrande's bankruptcy changed everything. By early 2023, Country Garden was one of the few property companies able to sell US dollar debt. They said they were strong financially and could handle the downturn that was kickstarted by Evergrande. Country Garden represented China's housing and urbanization story. It had less debt than Evergrande, so people thought it would survive the housing problems. But in August of 2023, it couldn't pay $22.5 million in interest on 2 US dollar bonds. Investors and banks got scared and they pulled back. Their confidence in Country Garden was shattered. Now, smaller cities and industrial areas are dealing with tight budgets and many people leaving, making it hard to handle a big developer's problems. Experts think this will hurt consumer confidence and make the property market downturn worse. To put it into perspective how severe this is, real estate accounts for about 25% of China's GDP. If this market falls apart, the entire country will be in turmoil. The whole industry has problems, especially in smaller cities. They have too many homes. Keeping people from panicking is tough because a lot of their wealth is in real estate. What once was considered a safe investment by the Chinese people is now the source of their problems. But Country Garden has been granted more time to solve its money issues from Chinese creditors. What's in the future for Country Garden? Country Garden was once a star developer in China, but its crisis could be even worse than Evergrande's in 2021. It could hurt China's economy even more. It bet big on smaller cities and industrial zones, which used to be vital for China's growth. But now it's in financial distress, and the company thinks it won't make its foreign debt payments, including its US dollar debt. Country Garden made an announcement to the Hong Kong Stock Exchange in October of 2023. They said it hadn't paid a $7 million US dollar loan. To make things even worse, they admitted they won't be able to meet offshore debt payments on time. This news led to a more than 10% drop in their stock price in Hong Kong. So far, as of October, their shares have fallen over 70%. Time is ticking for Evergrande, which faces a court hearing that could force it into liquidation on October 30th. As for government support, China is feeling pressure to help its struggling real estate sector. In August of 2023, they took measures to boost confidence, like reducing down payments and mortgage rates. But will these measures be enough, or is something more drastic needed? Let us know in the comments below, and be sure to watch the next video.